Welcome to the exciting world of a 100 trillion yen shift that's shaking up the Japanese industrial sector. By watching this video, you'll discover how Hitachi, a leader in social innovation, has identified physical AI as a groundbreaking opportunity worth 100 trillion yen. This isn't just speculation, it's a strategic awakening that's changing how global investors view Japan's heavy industry. At a recent strategy event in Tokyo, Hitachi shared insights on the next phase of artificial intelligence, which goes beyond just software or chatbots. They're merging generative AI with physical machinery. Analysts from Grok highlight Hitachi's unique advantage in integrating operational technology with information technology, creating a formidable competitive edge. Collaborating with pioneering AI firms like Anthropic and OpenAI, Hitachi is transforming its Lumada platform into a cornerstone of global AI infrastructure. This pivot is vital, leveraging Japan's rich history of proprietary industrial data, something that software-focused Silicon Valley giants struggle to match. The effects of this transformation are already visible in the robotics sector. For instance, Fanuc Corporation, 6954.T, has shown impressive movement with an EMA 12 of 7,508.11 and an RSI of 68.46, nearing the overbought mark. Meanwhile, Yaskawa Electric Corporation, 6506.T, has reached an RSI of 70.25, indicating strong investor interest. Harmonic Drive Systems Incorporated, 6324.T, is also gaining traction with a robust MACD histogram of 140.33. For global investors, this shift suggests a new phase in the AI trade, transitioning from digital chips to the physical machines that power the real world. In the race for technological supremacy, Japan has carved out an essential niche known as the precision moat. While the United States leads in AI software and China excels in large-scale manufacturing, Japan retains its stronghold on high-precision hardware crucial for modern automation. An industry analyst specializing in robotics supply chains emphasizes that Japan's strength lies in upstream components, where precision is key to the success of production lines. This is why Japan proudly holds the title of the world's leading supplier of factory robots, commanding approximately 45% of the global market share as of early 2026. Recent market data from May 20, 2026, reflects this structural strength in stock performance. Fanuc Corporation shows a bullish trend with its 12-day EMA at 7,508 yen, significantly above its 26-day average. Yaskawa Electric and Harmonic Drive Systems are also attracting intense investor interest. Notably, Harmonic Drive, which supplies the precise gears necessary for robotic joints, has an RSI of 68.7, indicating strong momentum as it approaches overbought territory. For investors, these companies act as a toll booth on the road to global automation. As AI continues to evolve, the physical hardware needed to execute those digital commands remains a unique specialty of Japan. With Yaskawa's RSI recently touching 70.3, the sector is heating up, yet the fundamental demand for Japan's precision components provides a resilient tailwind that software or mass production cannot easily replicate. Masayoshi Son is making a monumental return to the forefront of the global tech stage, shifting SoftBank's strategy from venture capital to building the physical backbone of the AI era. The core of this transition is Rose AI, a new venture fueled by a staggering $100 billion investment target. This is not just another investment fund, it is a calculated push to dominate the AI-driven infrastructure market. Historically, SoftBank's vision funds focused on the application layer of the internet, think Uber or WeWork. However, Sun has realized that the true bottleneck for artificial superintelligence is the physical infrastructure, specialized data centers and the advanced automation required to maintain them. This pivot marks a transition from being a financial investor to an industrial architect of the AI future. Lucas Ziegler, a tech investment analyst with over 200 engagement points on Market Insights, notes that SoftBank established Rose AI specifically to build data centers utilizing autonomous robots. According to Ziegler, the strategic roadmap aims for a massive $100 billion IPO by late 2026. This vision places SoftBank at the intersection of energy, compute, and robotics. For global investors, the most significant ripple effect is felt within Japan's world-leading robotics sector, which provides the critical components for Sun's automated data centers. This isn't just about software, it's about the gears, sensors, and actuators that move the AI world. Looking at the technical data for Japan's robotics sector, the market is already pricing in this massive tailwind. Fanuc Corporation is displaying strong upward momentum, with its 12-day exponential moving average at 7,508.1 yen and an RSI of 68.4, hovering just below the overbought threshold. We saw it breach the 70 RSI level multiple times in May 2026, indicating sustained institutional interest. Yaskawa Electric Corporation is even more heated, with an RSI of 70.2, formally entering the overbought zone as investors chase the infrastructure theme. Meanwhile, Harmonic Drive Systems, the provider of essential precision gears, maintains an RSI of 68.7, with its 12-day EMA positioned at 6,119.3. These technicals suggest that while the sector is heating up in the short term, the fundamental shift toward AI infrastructure is providing a solid floor for these industrial giants. The primary impact for individual investors lies in the re-rating of these industrial tech stocks from cyclical manufacturers to high-growth AI infrastructure plays. The synergy between SoftBank's capital and Japan's manufacturing DNA is the core narrative here. Moving forward, the critical scenario to watch will be any further announcements regarding Rose AI's energy procurement. If the project secures sustainable power sources, expect the current rally in robotics and cooling systems to accelerate. However, if energy constraints delay the 2026 IPO timeline, we could see a sharp technical correction in these overbought robotics names. Japan is embarking on an ambitious mission to reclaim its industrial crown through the National Physical AI Alliance. This isn't just another government initiative, it's a strategic pivot backed by an impressive $6.3 billion, or roughly 1 trillion yen, from the new Energy and Industrial Technology Development Organization, known as NITO. The goal is clear. While the United States and China excel in the virtual realm of large language models, Japan aims to dominate the physical landscape where AI meets hardware. Eclipse, a geopolitical and technology market analyst, highlights that this alliance is targeting a 30% global market share in physical AI by the year 2040. This represents a significant escalation from past efforts, where giants like Sony, Honda, and NEC operated in isolation. Now, under this NITO-supported framework, they are joining forces with others like SoftBank and Preferred Networks to establish a shared data infrastructure. This collaboration combines Sony's world-leading image sensors, Honda's mobility data, and NEC's network processing to build a trillion-parameter AI model specifically designed for machines. For investors, this signals a structural shift toward the physical AI sector. Let's analyze the key players in Japanese robotics: Fanuc, Yaskawa Electric, and Harmonic Drive Systems. Fanuc stock reflects a clear bullish trend with moving averages trending upward, and its RSI currently at 68.4, nearing the overbought threshold. Yaskawa Electric shows even stronger momentum but carries immediate technical risk, with its RSI climbing to 70.2, suggesting potential short-term consolidation despite a bullish MACD signal. Harmonic Drive Systems is also gaining traction with an RSI of 68.7 and a strong MACD signal. The volatility is notably high, indicative of the market's aggressive bet on high-precision components. Success for this alliance hinges on federated learning, allowing companies to train AI on sensitive industrial data without compromising trade secrets. If Japan can standardize this platform, the 2040 market share goal becomes attainable. Investors should be on the lookout for announcements regarding standardized data formats among these core companies, as this could serve as a primary bullish catalyst for the robotics sector in the coming weeks. This week, we are witnessing a historic convergence between large language models and industrial hardware, a phenomenon known as the global AI hardware Synarchy. For decades, Japan has been a leader in robotics, yet the intelligence aspect remained rigid. Now, strategic moves by Hitachi and Fanuc are merging the digital brain of Silicon Valley with the physical muscles of Japanese engineering. This transition from pure software to physical AI is a pivotal moment for global investors. Hitachi's new partnership with Anthropic exemplifies this trend. According to Grok's summary, this alliance focuses on integrating frontier AI like the Claude models into Hitachi's Lumada 3.0 ecosystem. This isn't merely a software update, it represents a large-scale deployment for about 290,000 employees globally, aimed at transforming mission-critical infrastructure in energy, transportation, and finance. The primary objective is physical AI, machines that not only process data but also operate autonomously in complex, real-world environments. Concurrently, the robotics market was energized by the collaboration between Fanuc and Google. Fidget, a global equity trader, noted Fanuc's shares surged to record highs post-announcement, reflecting heightened market expectations for AI in industrial settings. By integrating Google Cloud's Gemini Enterprise and the intrinsic robotics platform, Fanuc is empowering its 1.1 million installed robots to understand natural language and recognize objects without rigid, proprietary code. This effectively positions Fanuc as a hardware leader in a new era where Google provides the operating system for the factory floor. Focusing on technicals, Fanuc 6954.T has shown a sideways trend recently but with significant volatility at 85.7%. Its RSI stands at 68.46, nearing the overbought threshold, while the MACD signal remains positive. Yaskawa Electric 6506.T is flashing a caution signal with an RSI of 70.25, indicating it has already entered overbought territory. Meanwhile, Harmonic Drive Systems 6324.T, a key supplier of precision gears, exhibits massive volatility of 183.2% with an RSI of 68.74, reflecting its high beta status in this robotics rally. For investors, the implications are clear. The AI trade is shifting from data centers to the industrial floor. Analysts agree that the physical-digital bridge is the next growth frontier, but opinions vary on whether the current price surge is sustainable. Next week, the key point to watch is whether Fanuc can maintain its momentum above its Ichimoku conversion line of 7,978 yen. If this trend holds, we could be entering a long-term re-rating of the entire Japanese industrial sector. Now, let's turn our attention to the titans of the Japanese robotics sector, Fanuc and Yaskawa Electric. These companies are not just market leaders, they are the essential barometers of global industrial demand. As of today, May 20, 2026, the technical setup reveals a captivating tug-of-war between momentum and caution. Starting with Fanuc 6954.T, its technical indicators show that momentum remains remarkably strong. The Relative Strength Index, or RSI, stands at 68.46, placing it right at the edge of the neutral zone without crossing into extreme territory. More importantly, the MACD histogram is currently at 91.6, confirming a strong bullish trend with the 12-day exponential moving average at 7,508 yen. Yaskawa Electric 6506.T presents a more stretched profile, with its RSI climbing to 70.25, officially entering the overbought threshold for the first time since May 7. While the MACD histogram remains positive at 86.96, this overbought signal suggests that short-term upside may be limited. We're also keeping an eye on Harmonic Drive Systems 6324.T, which maintains a neutral RSI of 68.7 despite a high MACD of 718.5. The volatility in this sector has been significant, with Yaskawa experiencing over 100% price swings in recent months. For global investors, the core takeaway is evident. While the long-term structural trend driven by factory automation remains intact, current technical levels indicate a period of consolidation. The implication for your portfolio is clear. it's time to shift from aggressive chasing to a more cautious buy-on-dip strategy, focusing on the 26-day EMA levels for safer entries into these high-growth leaders. Welcome to this week's Feature Corner, where we delve into the extreme volatility characterizing today's high-alpha gems. As we progress through May 2026, the precision machinery sector is at a critical turning point amid rising bond yields globally. This macro environment has prompted a major reassessment of growth-heavy valuations. Has Linda Amin, chief international correspondent and anchor for Bloomberg Television, recently discussed the survivability of AI-linked stocks in this high-yield climate. She emphasized that the ongoing surge in bond yields is driving a significant market reshuffle this month, separating structural leaders from speculative names. This pressure is especially evident in Japanese robotics. Take Harmonic Drive Systems, ticker 6324. Our latest technical data shows a staggering volatility rate of 183.16% over the past 3 months. Despite extreme price movements between 2,420 and 7,380 yen, the RSI currently sits at a neutral 68.7. Technical indicators reveal that momentum remains surprisingly strong. The EMA 12 is positioned at 6,119 yen, maintaining a bullish gap over the EMA 26 at 5,400 yen. Furthermore, the MACD signal stands at 578 with a positive histogram of 140. For investors, the primary challenge is valuation compression. While companies like Harmonic Drive are vital to the global automation supply chain, their high-beta nature makes them sensitive to yield spikes. Monitoring the Ichimoku Senkou span B at 4,105 yen is now crucial for identifying a structural price floor. In this high-stakes environment, the ability to navigate this volatility will determine if these gems deliver true alpha as the 2026 market reshuffle unfolds. Welcome to the Global X Sentiment Roundup, where we explore the widening gap between retail and professional investors in the physical AI sector. Tomo, a Japanese stock expert, a prominent equity specialist with over 68,000 YouTube subscribers, argues that physical AI is poised to become the next defining domain, backed by massive capital from Nvidia, SoftBank, and OpenAI. However, Ryoma Tachibana, a daily Japanese market analyst, points out that the sector experienced a sharp 4.6% correction on May 20, 2026. This was driven by the broader Nikkei 225 slipping below the 60,000 mark and 10-year JGB yields hitting a multi-decade high of 2.8%. While retail investors are retreating due to interest rate fears, professionals view this as a prime entry point. Noise to Alpha, a quantitative investment researcher, suggests that despite impressive one-year returns, Japanese robotics remain undervalued by retail investors. Technically, Fanuc Corporation, 6954.T, is showcasing an RSI of 68.47 with an EMA 12 at 7,508.11, reflecting steady institutional support. Conversely, Yaskawa Electric, 6506.T, is signaling overbought conditions with an RSI of 70.26, suggesting that professional accumulation is nearing a localized peak. Meanwhile, Harmonic Drive Systems, 6324.T, remains neutral with an RSI of 68.74, though its MACD histogram of 140.33 indicates an underlying bullish trend. For global investors, this sentiment gap represents a significant opportunity. As optimism for domestic automation grows, any stabilization in interest rates could trigger a substantial retail catch-up trade. Keep an eye on the 60,000 Nikkei level next week, reclaiming it will likely be led by these physical AI giants, turning current volatility into a long-term tactical advantage.